makes sense. What you're trying to say is making sense to me. I'll just kind of rephrase it for you. What you're trying to say is that for the sake of comparability
हाँ,
across different companies, and not just that, consistency from one year to another,
yes,
you are saying that there should be rules because you don't want that in year one you are doing accounting in a particular way for a particular transaction. Let's say in this year I have showing interest expense, next year I don't show the interest expense. You don't want all those things to happen because then it will not be comparable or consistent, and that's why accounting rules are existing, right? That's what you're saying.
yeah, that's the reason.
What you are saying is partially correct. There is a better understanding or a better way to look at it. Let's talk about it. Are you aware of a company called as DMart?
Yeah,
The name of that company is Avenue Supermart, but let's say I'll stick with DMart because that's kind of a popular term. Okay. I don't know on the if you're aware on the asset side, DMart has something called as land. You know why? Because out of roughly around 300 stores owned by DMart, 80% of these stores are owned by the property. The property is owned by DMart. They don't take it on rent. So there are 300 stores of DMart across India, but 80% of their stores is owned by them. What they do, they purchase the land and they build or they construct the store on it.
okay,
This is how they do. Okay?
yep,
Now imagine all these external stakeholders are looking at the balance sheet of DMart. Imagine the value of the land, let's say, should be 40 crore, but they are showing it as 400 crore. Do you think this is wrong, right or wrong? It should be 40 crore, but guess what? DMart is saying no. Let me put it at 400 crore. Is that a
this
good thing?
this can be right because maybe this what they are showing is that what they have 40 crores is what was purchased and what is the market value might
I
be
actually
40
never
crores.
mentioned anything about purchase price and market price. I'm just saying that it should be 40 crore, but for some reason, let's say there is no accounting standard. For some reason, they showed at 400 crore. Do you think that's a fair thing?
No, then
No,
it
na.
is not.
Because these
No.
external stakeholders are thinking that, listen, I'm not running the business. The only way for me to understand the business is by looking at the numbers. Imagine if these numbers are not reliable. Can I say it will create a chaos?
Yeah, it will
So the
definitely.
so the objective behind which there are accounting standards is that they are going to ensure that all the values on the income statement and balance sheet show the true and
And
fair view of the business. That is the larger reason why accounting standard exists. You take any accounting standard in the world, all the accounting standards, the rules are designed to focus on one thing. Is it showing true and fair view or not? Let me prove it to you. For example, accounting standard in India, they say that the value of the land on the balance sheet should always be at original cost. Let's say it is 4 crore, okay? And not at the market price. Let's say market price is 14 crore. It should be at 4 crore and not at market price. But the same accounting standard in India tells that, listen, if you have invested your money in, let's say, Reliance shares, just a basic general investment, then in that case, it should not be at the purchase price, it should be at the market price. Like you must
okay.
have, let's say, for example, I'll just put down a number so it's convenient. You must have, let's say, purchased Reliance at, uh, you know, 1000, but today the price of the Reliance is, let's say, 1400. It should be at 1400 at not at the purchase price. Can you tell me why is it so like that? For land, purchase price, but for Reliance, market price. How does that show true and fair view of the business?
Is it because of the concept of conservative?
No.
No, no.
Nah.
That so in this case where land it is the original cost is 400 and what is the market price? Like that is practical enough that yeah, what is market price? Should I share what you purchase it around? So what is the current market standing? That's
I guess you are having an answer to this, but you're not able to express, so let me help you out. You see, when you are going to buy Reliance shares in National Stock Exchange or Bombay Stock Exchange, do you really negotiate with the opposite person that, oh, no, no, not 1400, I'll buy at 1300? Do you really negotiate, or do you accept
no.
the price which is over there?
Yeah, accept the price.
Can I say this in that case, then this 1400 is undisputed. And why it is undisputed? Because it is reliable. You trust in the mechanism, you trust in the stock exchange or the stock market, and you realize that okay, the mechanism through which the stock market has determined the price of 1400, you realize that it is reliable, right?
Right.
But in case of property market in India, can I say, whenever you go and buy a property, whether it is land or anything, can I say, if someone is saying 10 crore, you will always negotiate, you'll be like, you know what, 9.5 crore, 9.6 crore. My point is, the market prices in India, the property market prices in India, can I say these prices are kind of disputed? Disputed in the sense you can negotiate,
Yeah.
and they are kind of unreliable.
Yes.
So that is what the Indian accounting standard says. Listen, in case of land, there is no way to figure out that a particular market prices number is reliable or not. But guess what? You purchase this land for 4 crore rupees and it is mentioned in the agreement. So that way it is a reliable number. And now put it other way around. Imagine if accounting standard allows DMart to show the value of land at market price instead of original cost. Can I say DMart will put any number they want?
Yeah,
Because
they'll
there
put
is no
any
market
number
price to prove it.
to prove it because yeah, it is disputed.
Yeah, it is disputed. So I could write 40 crore, whereas the market price could be 14 crore in reality. But who cares about it? There is no mechanism through which a reliable market price is determined in case of Indian property market. And that is the reason why, in the name of true and fair view, Indian accounting standard says that, listen, in case of land or property, you will always show it at the original cost or the purchase
Mhm.
price. But in case of Reliance shares, it's a reliable market price over there. We can use that number. Make sense?
Right. Make it
So then it does make sense. And I don't know, I'm just, with this small accounting standard, I've just made you realize that all these rules are designed to keep in mind only one thing: true and fair view.
right.
Sorted?
Sorted.
So then can we start our demo?
Yeah.
Because if you thought that this was our demo, no. I was just ensuring that you connect all the dots. That income statement balance sheet is prepared because you are curious. Guess what? You are not the only one who's curious. External stakeholders are also curious because, hey, by the way, they don't really run the business on day-to-day basis. So the only way for them to understand the business is by looking at the numbers, income statement balance sheet. And so that these numbers show the true and fair view of the business, accounting standard exists. So I hope you keep in mind accounting, financial statement, curiosity, external stakeholders, accounting standards, true and fair view. Sorted?
Sorted.
So now that we know about it, let's talk about some of the basic principles of accounting. All we need to do is keep in mind true and fair
Yeah.
view. Because think about it, Victor, somebody must have come up with the accounting methods, whatever you see right now on the screen, for the first time. We are
Right.
lucky maybe that we got all this thing written in a book and we follow that. But somebody, maybe 500 years ago, somebody must have done this, you know, realized for the first time, right?
Right.
Let's try and think,
That's
how
the
did
reason.
they think? Because they
Yeah.
must have thought logical probably. So let's say we are first group of accounting people in the world, and our friend is coming and asking us a question. Now here's a typical milestone when any sale transaction is done. First, you receive the order from the customer, then you deliver the goods to the customer, and later you receive the money, or I would say cash, from the customer. And our friend is asking, hey, when should I show or recognize my revenue? Should I recognize my revenue when I receive receive the order, or should it be when I deliver the goods, or should it be when I receive the cash? Remember, our response will be based on whether it is true and fair view. So the first question: is it okay if I recognize my revenue on the day I receive the order? Will that show true and fair view of the business?
No.
Why? You are correct, but why?
Because see, we have received the order, but
Huh.
have we actually given the service? Have we completed the cycle? Like, have we delivered the goods to him?
No, I mean, no. So then you're saying that the second one is the answer. That's when you should recognize the revenue. But you're still not answering my first question. What is the problem if I recognize my revenue on the day I receive the order?
But
Am I clear with
yeah,
my
yeah,
communication?
yes,
Yeah.
yes. But it doesn't. It might not show us the true and fair view, right?
Why? Why?
Of
You're right, but why? What
of
could happen that it will not show the true and fair view? Think about it.
you receive the order,
Huh?
um, and it seemed like the one which you have just given an example. Like it would be a disputed one. Like if I have to make an analogy, it would be again.
Can I help you out over here?
Yeah.
Can I say what you're trying to say is that, hey, let's say I recognize my revenue on the day I receive the order, but what if the order gets cancelled the next year?
Yes.
Can I say it will not show the true and fair view of the business to the stakeholders, the external guys? And
Yes.
that is the reason why this is out of the question.
Right.
So
Right.
now I have,
That's the one.
yeah,
Correct.
so now I have only two choices. A, I recognize my revenue the day I deliver the goods, or the one in blue color, I recognize my revenue the day I receive the cash. And by the way, I don't know if you realize that's exactly what is accrual accounting methods. You see, there are two accounting methods: accrual accounting and cash accounting method. What is accrual accounting? Accrual accounting answers the very same question which our friend was asking. When should I recognize my revenue and when should I recognize my expenditure? So accrual accounting says, hey, then listen, you recognize your revenue on the day you deliver the goods or services, whatever it is, not when you receive the money. And expenditure, the day when you receive the goods and services, like raw materials and all, not when you pay the money to your suppliers. On the other hand, cash accounting is exactly opposite. You recognize revenue on the
When
day
you
you receive the money, and you recognize expenditure on the day
did you
you
spend?
pay the money. So are you realizing that these two methods which are taught to us since our childhood are no coincidence? Somebody must have thought it for the first time, and that's when they stuck. That, oh, okay, should I recognize my revenue when I deliver the goods, green color, accrual accounting, or should it be when I receive the money? Which method will show the true and fair view of the business? Now you tell me, accrual or cash? Or let's go back to our original situation.
Uh,
True and fair view. Keep that in mind. Remove everything. Keep your mind empty. Don't talk about things which you have heard of but not sure of. Because I'm going to counter.
right.
True and fair view. Tell me.
I would say the accrual one would show a true and fair view.
Is that what your heart is saying or is that what your mind is saying? Tell me.
So my heart is saying that
Are
it's
you sure
accrual.
about that? Because here my counter is, what if I deliver the goods and the customer doesn't pay the money? In that case, it won't show the true and fair view. That's my counter.
But then again, if you deliver the goods, then you are actually creating a liability. Sorry, an asset, like a data. So in the
That
future, that
is, see, that what you are saying is what accrual accounting is telling you. I'm still arguing at the very basic level. Let's say I'm a new person to the accounting and I'm arguing that, hey, what's the problem? You want to show true and fair view, right? If I
hmm,
deliver the goods, what if the customer doesn't pay the money? Then unnecessary people will not get the true and fair view. Instead, what I'm saying is that if the customer is
cash,
making the
yeah,
payment, then there is a short sale. What say?
right. So then in that case, it's cash. Cash is like when you get the when you recognize the revenue when you get the money.
Can I say
And
somebody who's coming across accounting for the first time would always go for the blue color one, the cash
yes,
accounting,
yes, yes,
right? And
yes.
I'm sorry if I was just trying to push you
No,
around.
because we are programmed to look at accrual from that
Yeah, we are
perspective.
programmed, but that's why I asked you. Are you thinking from your heart or are you thinking from your mind? So your
Yeah.
heart, can I say, if you will, I'm not going to push you over here, but if you agree, can I say your heart is saying that, hey, you know what, it should be cash basis. That makes sense. True and fair view.
Yeah. Yes.
But as you know, the whole world follows accrual accounting. The question is either they are idiots or either we are idiots. Am I correct?
Right.
So then the question is why the whole world is following accrual accounting, bro. So, let me prove it to you whether the world is an idiot or we are the idiots who are not thinking of accrual method. Let me prove it to you with a small example. See, this is how the transaction has happened. Observe. On day one, let's say you started your business just now. On day one, you purchase steel. Who are you? You are just a trader. You're buying steel, selling the steel. You purchase steel worth $15 million. And let's say it is cash on delivery. Like you paid the money and you received the goods immediately, okay? Then on the last day of the year, you sold this steel. Now, actually, that's not the word. You delivered the steel, and the selling price which you agreed with the purchaser was $25 million. Of course, you did not receive the money because you are receiving $25 million in year 2. And one last thing, as I'm trying to keep the transaction very simple, you assume that there are no transactions done in year 2. That means you did not do any of the business. Now let's follow cash accounting and accrual accounting and see which method is showing the true and fair view of the business. Which method is depicting the business the way it actually happened. Shall we do that?
Yep.
Okay. So I'm taking cash accounting because we all are rooting for cash accounting. In year 1, what does cash accounting says? You recognize revenue only and only when you receive the money. Did I receive the money in year 1? As per the facts of the case.
Yes, we received the money first, no?
Did we?
No.
Because in
So,
red color,
first-
if you see, it is saying that you receive the money from a customer only in year 2.
Year 2.
What's an Aman?
Yeah, I mean, we have not received the money as of yet.
Yeah, so we haven't received the money in year 1. So we are following cash accounting right now. And cash accounting says if you did not receive the money, you can't show it as revenue. So can I say over here the revenue will be 0? And did we pay the money in year 1?
Yes.
Cash on delivery, right? Day 1. And it was $15 million. So then can I say the profit in year 1 is negative 15? Am I correct, Naman?
Yeah.
Correct.
Let's talk about year 2.
Because
Sorry?
Yeah, that's what I'm saying. Because you have not received the money, so
Ah.
your revenue in that case will be 0.
Perfect.
You have made the expenses. So overall, you will be in a loss.
Perfect. Let's talk about year 2. In year 2, did you receive the money? Yes,
You
no?
received 25.
Year,
You
year 2
received
we
25.
received 25 million.
Yeah, and did you pay any money?
Nothing.
No.
So then can I say in year 2 your profit is positive 25?
Right.
Now as against this, let's follow accrual accounting. In year 1, what does accrual accounting say? You recognize revenue the day you deliver the goods. Did you deliver the goods in year 1?
Yeah.
Yeah, na? You delivered
Yes.
it on the last day of the year
Yes.
1, right? Which
Yes.
is 25. And did you receive the goods in year 1?
Yeah,
Purchase.
expenses would be
Yes.
expenses would be 15 million.
Perfect. And can I say your profit is positive 10?
10.
Acha, in year 2, did you deliver any goods or receive any goods?
No.
In year 2, no.
And then can I say your profit is 0 basically?
Yeah.
Now tell me one thing, guys. Forget away everything. Let's say you are in grade 5. If you buy one thing and sell the same thing, will you have one profit number or two profit number? If
Can you
buy,
repeat?
Sorry.
Vinit, can you repeat, please?
If you buy one thing and sell the same thing, will you have one profit number or two profit numbers? Will there be one instance of profit or two instances of profit?
I think we will have one instance because we
One
are buying
instance,
and
na?
selling the same
But
thing.
look at the cash
Yeah.
basis of accounting. Cash basis of accounting is showing two instances of profit. Negative 15 and positive 25. How is that possible? Second of all, in year 2, did you actually do any business?
No.
Then cash accounting is showing that yes, you have done some business because the revenue is 25 million. So the stakeholders who are not running the company will think that, oh, okay, some business must have done in year 2. But actually, have you actually done any business in year 2?
No, nothing.
So
So,
then, can I say in this example, cash accounting is not showing the true and fair view of the business?
yeah.
But here's the case. In case of accrual accounting, if you notice, in year 2 there is no revenue and there is no expenditure because there was no transaction or no business done in year 2. And can I say your accrual accounting, it is also showing one number of profit. Can I say accrual accounting does show the true and fair view of the business?
So here's what it will be. Accrual accounting is showing a true and fair view basis a particular point in time, like during that particular time,
Yeah,
like when.
but I'll tell you why accrual accounting makes sense more. Because imagine we are no we are no stupid businessmen. Imagine the fact that you have delivered the goods and you are okay if the customer makes the payment later. Can I say in your mind you have done the sale? Because we are not stupid, na. I mean, if we
Yeah,
believe that the customer is not going to pay the money later, why will we deliver the goods in advance? Tell me that. The fact that we have delivered the goods without asking for the payment on the same day, can I say we are confident that the customer will make the payment later?
yeah,
So then in our mind, can I say we have done the sales?
yes,
And that's exactly what should be reflected on the income statement, na? True and fair view. The reality is that we have done the sale then.
yeah,
And by the way, we are legally in right. Once we deliver the goods, we have legal right to ask the customer to make the payment. Of course, if the customer doesn't make the payment later, there is another accounting standard to it. Provision for bad debt. We'll talk about that. But my point is, the question was, when should we recognize revenue? Can I say accrual accounting in all the situation will show true and fair view, but cash accounting may or may not show true and fair view of the business?
Vinit, how long would it take? Because I have some other commitments. I thought like it's
Just a
a.
moment. So, guys, then can I say that we all agree that yes, we should follow accrual accounting method because it does show true and fair view of the business, right?
Right.
Naman?
Yeah, right. You can say
Yeah.
that.
Now, here's the thing. Along with accrual accounting, there's one more method which is called matching principle. We follow that also. What does matching principle says? Read the literature. Firm recognizes revenue and only those expenditures which has helped you generate these revenue. That's it. Let me give an example. Let's say there is this black pen and there's this red color pen. Okay. You are just buying and selling pens. Okay. You purchase the black pen for $10 and you purchase the red pen for $15. And you sold the black pen for $18. You were not able to sell the red pen in that year. Tell me, what is the profit number? Think like a fifth grader and answer me that question. What will be a fifth grader say? What is the profit?
$8.
$8. Do you agree with this? What do you say, Victor?
Yeah, $8.
So then can I say that's exactly, I mean, a fifth grader already knows this. Then why do you need a fancy accounting guy to come and tell you that? You recognize revenue and only those expenditure which has helped you generate that revenue to calculate profit. And that is exactly what is matching principle. Here's what accounting experts do to you, by the way. They take your logic, wrap up in some fancy word and give it back to you. And you are totally having a eureka moment. Oh my god, what a new thing I've learned. But this is something which a fifth grader knew, right? In
Right.
fact, this cost of $15 becomes your closing stock on the balance sheet. Because next year, when you sell this red color pen, this closing stock will become your cost of goods sold, and that's how you calculate profit. Again, in line with matching principle. Am I correct?
Right.
Make sense? Naman?
Yeah. Yes.
So now that you know accounting, accrual accounting and matching principle, answer me one question. Let's say I've purchased cash on delivery. I've purchased a factory building worth 10 lakh dollars and the life of that building is 10 years. My question to both of you guys is, accrual accounting and all, why this 10 lakh dollar, by the way, is nothing but just an expenditure? Why am I not showing this 10 lakh dollars of expenditure in my profit and loss account? Why am I putting it on balance sheet as asset? Tell me. Why? It's just an expenditure, right? So what whether I'm buying a factory building or a fountain pen, 10 lakh dollars is an expenditure. Why does that become my asset? And why not in profit and loss account? Tell me.
It depends on how you want to take it. Like, how you want to. So if you put everything, you can take it on the P&L. Okay, or you have, when you take it
It
on the
doesn't show
balance
true and
sheet,
fair view if it doesn't show true and fair view if I put it on
Yeah.
P&L.
Yeah. And on the balance sheet, it is like you'll break it up with depreciation every year and put
Why
it
am I doing that? You're right, but why am I doing that?
so that you get a true and fair view of what exact expenditure you have done. Like, the true and fair view concept.
I know that.
That
No,
only.
See, we
but I
have to
think
make a conversation as if somebody else listening to this will be able to understand.
so the reason why we are not including it in the profit and loss statement is because it is not an expense. Like if I am buying a building of let's say $10 million, so I would have an initial share capital, and from that, but
Let's not get into
from that
paisa
capital,
kahan se hai. Let's not get into from where you got the money. Let's just talk about that you spend the money of 10 lakh and bought a building. Now what?
now I have an asset of $10 million.
But why can't I show that as an expenditure in P&L account? It's a money I've spent.
Life of the asset. It would be the benefit that you are going to get. It's not how much.
Exactly.
Hmm.
You see this expenditure, it's just an expenditure. Please don't look at factory building. Just think that is any expenditure. In this case, the expenditure is giving you benefit, but you know what? Not in the same year, but across its life. It is giving you benefit, no doubt about it. You see, when you purchase a fountain pen, it is giving you benefit in that year only. And that's why it is an expenditure in that year, P&L account. But this expenditure is giving you benefit over its life. And in line with matching principle, which even a fifth grader knew, you spread, I'll take another color, you spread this cost across its useful life. And the process of spreading this cost is called depreciation. Depreciation is not because it is wears and tear. Depreciation is because it is a beautiful example of matching principle, which is logical, true and fair view. Am I correct?
Right.
One last question to you guys. What should be the, let's say I tell you that the benefit this factory building is giving me is equal every year. Tell me what is the amount of depreciation every year. Just give me the number.
One
1 lakh?
$1 lakh. Yeah,
How did you get? Is it, can I say 10 lakh dollars upon 10 years?
Yeah.
And what is 10 lakh dollars? The original cost.
original value.
And what is 10 years? The useful life.
Useful life.
Have you seen this formula somewhere in your childhood?
Yes.
What is the name of this formula? Straight line method of depreciation.
Yeah.
By the way, this is not the final formula. The final formula is you subtract something called as the scrap value. What is scrap value? The value you will get at the end if you were to sell it, let's say $2 lakh. So then, my dear friend, what is your net cost? $8 lakh, 10 lakh minus 2 lakh upon 10 years. Are you realizing this? What I'm making you realize? Most of the people, when they come across this formula, they usually ratify. But I don't know if you realize, even the fifth grader, if you would have asked and understood everything logically, you would have figured out that straight line method is something which you already knew. They just give it back to you in some fancy word. You just had to ask few questions. Why, when I'm purchasing a factory building, it is a pure expenditure? Why does it not go in P&L? The answer to that question is matching principle. Because you know what? It gives you benefit across 10 years. So you need to spread the cost across 10 years. And the name of that process is called depreciation. Then the next question is, If it is giving you equal benefit, the depreciation should also be equal. That is what you said. And then the question was, how do I calculate that? And it was a simple math, which is nothing but the formula. If you would have asked the question, you would have realized that all the concepts which you would have learned in your lifetime is nothing but answer to some of the very basic question you could have asked. First question, why balance sheet should tally? How do I make it tally? Answer is double entry accounting system. Naman, you were not there, so you would not be able to relate. Another question, when
No
I'm spending
problem.
the money buying a factory building, why is it not going in P&L account? It's just an expenditure. But guess what? This expenditure is giving you benefit over more than 1 year. So you put it an asset and then you spread the cost, depreciation. The next question is, you could have asked, sir, you taught us straight line method of depreciation, WDV method of depreciation. Now, which method should I apply on which asset? The answer is depends. If it is giving you equal benefit, then SLM. And black color, if the benefit is reducing every year, the depreciation will reduce every year, and for that you follow WDV method of accounting or depreciation. What I'm making you realize is, this is how I usually teach. I don't take concept to the student, I take student to the concept. I make them realize somebody must have thought it for the first time. Let's talk about how did they think, the journey, so that you don't end up remembering ratifying the formula. In fact, most of the formula, in fact all of the formula, I construct in the classroom with my student. And there's only one agenda behind this. I want students to think, because if some of you are working, or I guess both of you are working, you would have realized that based on your degrees you will get interviews, you will get job, but to survive or progress in that job, you will have to be a problem solver. And that's exactly what education is giving you. The ability to reason, why this, why that, and also the ability to find answers. And once you do that enough, it becomes your nature and your habit. You bring that into your business, you bring that into your job. That's when people start really appreciating you. कि ये बंदा दिमाग लगाता है. This person thinks and then answers. That is what you do it. And once you do that enough, by the way, passing CFA is going to be a byproduct for you. The main product is your better and evolved personality. So I've worked for 12 years and I know what works and what doesn't work. I used to get jobs easily, but what helped me, separate myself from others was this ability. And later I realized that it is the education who has made me that capable. So please take it while you get it. Got it?
Yeah.